So there's a question we were supposed to do. Your same page 56. Please go to page 56. Let's go to page 56. Page number 56. Page number 51. But did you try? Yes. Did it balance? Not under the universe. But kidogo tu ndio. Something small. Small issues. Kuna mtu ana request hapa. This is Esther. Hebu kidogo. So kuna mmoja alikuwa mnaomba kidogo, alikuwa naomba. Esther amefika, she's the one who had requested.
Zilienda wapi?
Who is that? Yes, now Esther Shin, so we can start. Mlisema hii likataka kubalance. Ati mkiwa peke yenu hizi balance. Haya. Tahidi bado nakuanga. Tahidi haya. So 2015 2016. Sasa nyinyi mlishafanya. Mimi sasa tutastart. Additional information. 5,000 ordinary shares of shillings 10 each were issued during the year at a price of 12 per share. Fixtures and fittings, which had an original cost of 85 million and a net book value of 45 million, were sold for how much? For 32 million during the year. The proceeds of the sale of long-term investment amounted to how much? 30 million. The following information relates to tangible and current assets. So, as you guys can see, required statement of cash flow in accordance with IS number 7. Good. Let's kick off. So, Tahidi Limited. Tahidi Limited statement of cash flows for the year ended year is ending when? 31st of October 2016. So have two columns. Shillings are in what? Millions. But confirm to me, after you attempted this question, did you realize even in exam at least you can do something on it? And was it this one in another blank, even in the true, false? To speak on behalf of others.
If they are going to be
this way,
yeah,
you will show them.
Yeah.
Correct. You have said shillings in what? Millions. They will just bring it that way. So, operating activities. Operating activities. Operating activities. So operating activities, we have what? Profit before what? Profit before tax. How much is the profit before tax?
300.
Operating profit. Huh?
300.
Yeah, 300. Give us there. Come on, weka tick. Useme passing is real. Then you say adjustment. Sure. So adjust for depreciation.
Yes.
That is the main culprit. So what can you adjust for thinking begins after you have written depreciation? Depreciation hatukupewa in a clear manner, so we have to calculate. Sure. So I want to do it outside here. Depreciation. Opening balance of depreciation was how much? 290. 290. Then there was fixtures which had originally cost 85, and with a net book value of 45 was sold for 32. So you less depreciation on what? Deep on disposal. So the asset which was disposed, the cost of that asset was 80 what? 85, and it had 45. The book value was 45. So depreciation was 40. Sure. So this one was done what? Disposed. Meaning the closing depreciation is supposed to be how much? 250. Then balance carried down. Balance carried down. 340. Yeah, accumulated depreciation at the end is 340. In case someone is struggling, those things are in note 4. They are in note 4. So this increase from 250 to 340. That is the depreciation charge for the year. So for the year, that is the BF. BF is what? 90. Balancing figure. We are saying it's how much? 90. 90. So that is the depreciation expense. Did you get that? Did you get that? Those who attempted? Okay, but you have seen. Correct. So that is the depreciation expense for the year. So you come here and say depreciation 90. After you have captured depreciation, you check. Yes, you check whether there was any gain or loss on disposal of an asset. Sure. Yes. So they said fixtures and fittings were which are written across this, and book value was 45, was disposed for how much? 32. Net book value was 45. Then it was sold for how much? 32. We lost how much? 13. So loss on disposal. Loss on disposal. So you said actually this is which sitting? I just started for which sitting is this? 2016 November.
Page 56.
Huh?
Page 56.
Page 56. Okay. So So now, after you've recorded that, is there any other non-current asset which was disposed?
No.
Equal. Note number 3, the proceeds of the sale of long-term investment was how much? 30. What was the book value of that investment? Investment, what was the book value? 25. Sure.
Yeah.
Then it was sold for 30. We gained, we lost.
Okay.
We gained how much? 5. We subtract. So gain on disposal. Gain on disposal. Gain on disposal. We gained 5. Now you lost 13. 13 was the 45 minus 32. And here it is what we get
30 minus 5.
30 minus
5.
giving you 5. We less. Yes. Right. Then now I want to go to the profit account. You check for me those items which were captured prior to the profit before tax. Yes? Before profit, before tax, but they are not operations. So sales, no. Cost of sales, no. Interest, no. Let me start from PBT, Nikipanda juice, no. So profit before, fine. Are you saying interest paid?
Yeah.
Interest paid is not an operating expense. Add back. So interest paid, that is how much? 70. You add back. Going up, admin is okay, distribution is okay. There is interest what? Income, nothing like that. Interest income is not an operating income. Sure. The only operating income is which one? Sales. So interest income, how much is this? We add with less. Less. Cost of sales is okay, sales is okay, then that is fine. That is over. So can you add for me this? Then you call it cash flow. Before what happens? Before working capital, that's what? Changes. Before working capital changes. So let me check what someone is saying. 448, that is, I am saying 448? So that is 448. Bring the working capital. Working capital. Esther Pole, in your text, I never saw you said you are feeling unwell. I've just seen it. Pole, we hope you are okay. And we will pray that you'll be okay. Can we pray? We'll pray for her. Hi. Working capital, inventory, receivables, payable. Tell me increase or what? Decrease. Sindikazi ya macho tu. Check for me. Kindly. Increase. So increase in inventory. Increase in inventory. What minus what? 150 minus giving you, we add with less. We less. Increase in stock means we are buying. Sure. Correct. Receivables?
Increase.
Increase.
Yeah.
So increase in receivables. Increase of how much, ladies and gentlemen? 390 minus 315. How much?
75.
75.
Yeah.
We also less. Payables. Payables, where are you?
Increase. The increase in payable.
Increase.
Yeah.
Yeah. So increase in payables. 127. 119. You get?
Yes.
8. That one we add.
We less.
Increase payables we add. Payables means madeni yako imekuwa mingi, lakini class unakuja na Range Rover. Lakini madeni huko nje. Ukisikia landlord alikoa kwa fence. Lakini akitoka unachukua Range Rover. You have money, you don't have money. You have money. Na ulipi madeni. Na ukikuitisha pesa unasema ask him my landlord. Na kama na deni but finally. How much? 115. From 448.
3
3?
3, yeah.
Evil.
Yes.
Is that normal? Cash generated from where? From operations. Then tax paid. Tax paid. Tax paid. Tax paid. Tax paid, we have to calculate how much was the tax obligation at the start of the year. Check corporation tax and current liabilities.
110.
They are not paid?
110.
110. Sure. During the year, check profit account. How much were we charged as tax?
140.
In the profit account, tax. Yeah, 140. Oh yeah, it's okay, 140. So at the beginning, we are not paid.
110.
During the year, we are charged
140.
140. 100, 110 plus this, it means tax obligation should be how much?
250.
250. How much remained unpaid at the end? Corporation tax? 120.
Yes.
So we paid how much?
130.
130. So you take 333 minus this, you get that one there. How much is that?
203.
2 or 3?
Yeah.
Call it A. Call it A. So, all right. Then let's go to investing. Investing, when you want to work out investing in cash flow, I told you to concentrate on what? Non-current assets. How much did you receive when you disposed? How much did you pay to acquire? Are we good? Yes, so let's check all the non-current assets. All, except none. All. So, property, plant, and equipment, I told you, it will have how many things? 2. What you received when you disposed PPE, and what you paid to acquire PPE. So write them here. Cash paid to, no, cash received. Let's start with that. Cash received on disposal, PPE, then cash paid to acquire PPE. Those two. So of these two, examiner will give you one, they will deny you another one. So which one are we given for PPE? Note number 2. That's fixtures. We disposed it for how much? So we disposed it for 32. So we received 32. Bring 32 here. It was sold for 32. Then, to get the acquisition, we have to prepare a PPE account. So I'm working for property, plant, and what? Equipment. Property, plant, and equipment. So balance brought down for PPE. 305. I hope everyone sees the balance sheet. When we started the year, PPE at a value of 305. Note 1 is shares, note 2, there was disposal. So less disposal, the one which was disposed to subtract. We subtract the cost of the net book value. Net book value, correct. Net book value was 45, you less. Then the ones which remain also depreciated. So you less what? Depreciation. So depreciation was how much? 90, we calculated. Then I told you there's one I normally forget, revaluation. So check under equity, check under your equity, check under equity. Are you seeing revaluation reserve? Are you seeing it? How much was revaluation at the start?
91.
91. At the end it went to?
100.
There was revaluation gain. Sure.
Yes.
Revaluation gain. So that is 100 minus 91. There was revaluation of 9. Meaning that when we are closing the year, it should be how much? The total should be how much at the close of the year? 179. 179. So skip one line. Mr. Examiner is saying that no, the closing balance is 300 and which one? 80. So that increase means they did what? Acquired. When they go off, I realize you have been off. Ama hiyo kalamu kuna mtu amekuwekea kitu hapo nyuma sasa. Ukini unakumbuka tu adjustment unakumbuka unakumbuka tu na went imekwisha. So acquisition is how much? 201. That increase. So bring here 201. That is cash out. True. Yes. Can you just analyze what we have said? Any question before I proceed? No question. I am still under non-current assets. Still under non-current assets. Under non-current assets. Under non-current assets. We have intangible what? Assets. What was the value of intangible assets at the beginning?
200.
200. At the end? Definitely they acquired. True. Yes. So cash paid to acquire intangible. Karibu na ule. Karibu na yeye. Alikuwa 50 minus 200, you get, hey, well, we paid how much? 50, subtract. This will be check. Your stress whenever you talk. I don't know, and later not anymore. Aye. That is over. Oh, investment, the book value was 25. We sold it for how much? 30. So cash received on disposal of what? Disposal of investment. We sold it at how much? 30. That is cash inflow. Sure. Yes. That is cash inflow. Okay. Cash inflow. Of how much? That is 3. I calculate for me that section 5. Section 5. So this one you said comes to how much?
189.
189. Plain. Negative. Eh? Thank you. Let's go to financing. Financing. Yeah, that's it. Financing activities. Financing, I told you to focus on what? Yes, you go to equity and loans. Eh? All right, so let's go there. Let's go there. As we connect to this, who's someone not one? 3.1. 5,000 ordinary shares of shilling 10 were issued during the year at a price of 12. So you just say cash received on issue of shares. So cash on issue of what?
Shares.
Of shares. You take what plus what times what? 5. You're looking in millions. Sorry, 5, right? So 5 times 12. That is 60. But if that was not given, you reconcile. Eh? The same figure. It's the same. 150 plus 150. Check your equity shares. Eh? You combine with the premium. 150 plus 150, 300. Closing 200 plus 160, 360. Difference 60. Correct.
Yeah.
Evaluation ignore. Are you seeing revenue reserve?
Yeah.
Are you seeing revenue reserve? Yes. Revenue reserve, listen to me. Revenue reserve should help you. Revenue reserve is the other name of retained earnings. It should help you to determine, yes, it should help you to determine the dividends for the year. So I want to do it outside here. I go have a small working. Have a small working outside here. So revenue reserve. Revenue reserve. So revenue reserve mfanye hiyo. Haya. Haya. Eh? So balance brought down. What was the revenue reserve at the beginning of the year? Is the retained earnings. It was how much? 100. For the year, how much was the profit for the year? Go to the profit account. You will get profit for the year. Yes? 3? Yes, profit for the year in the profit account. Why am I disturbing myself and dividends for the year we have been given? To pay 100. Now let's assume it was not there. So you start with 100. For the year, take profit after tax before dividends. 160. Profit after tax. Are you seeing it? Yes. So this total comes to 200 and what? 60. Skip one line. Carry down. What is the revenue carried down as per the examiner? 100 and what? 60. So dividends is the balancing figure. That decrease means they paid dividends. So how much? 100. So that 100 is the dividends for the year, though we were given. However, we are not going to use 100. Come on, take 100 up. Yeah. You know why? Check your current liabilities. Check your current liabilities. Are you seeing proposed dividends? Yeah. Proposed means what? Have you paid? No. No. So another account here. Proposed div. At the beginning of the year, how much was proposed? Proposed means they have intention to pay, but they have not paid. 80. That is 80. During the year, for the year, we have determined that the dividend we should be paid is how much? 100. Meaning in total, dividends payable should be 100. But the examiner said no. At the end of the year, how much is proposed? 100. So how much was paid? 80. 80 paid. So 80 is the dividend which was paid. Pass. Honorable members from the 80. So you come here and say dividends paid. Dividends paid. How much? Cash out. What are your two-step verification? Yes. So that is 80. Go to the next item. Equity is over. Go to non-current liabilities. Are you seeing loans? Are you seeing the loans? How much was the loan at the start? 50. Loan went to 170. So loan acquisition, Loan acquisition 170 minus
50.
How much?
120.
Is that okay? All right. Then we wind up with interest. Sure. So interest, we paid how much? Check there. We paid how much of interest? 75. Then there was interest income of 25. So it's like we paid how much? 50. So I have to clarify this again. Interest can be classified according to the standard. It can be classified either you remove it from to make a tax, you can subtract it down there, you can subtract it under investing, or you can subtract it under financing, provided that the entity remains consistent. Now that is in reality, yeah? You remain consistent with where you want to do what? To classify interest. So the same case applies to dividends. Interest and dividends, there is a leeway. You can classify it in any of the three, provided the entity remains consistent. But we fail, some of us fails, that dividends and interest should be under what? Financing. Because who are we paying dividends? Shareholders. Shareholders are the providers of capital, they're the financials. Interest we are paying because we have what? Loans. So we feel it should be a financing activity. But wherever you subtract interest, nobody will mark you wrong unless interest paid. Interest paid. Interest paid. You take, we paid 75, but we had an income of 25. So we paid how much? 50. Our question. Can you wind up that? So how much?
50.
50 positive.
Yes.
Net cash flow. Net cash flow is A plus B plus C. You are talking about 64. Positive. Positive 64. Then bring opening. Opening what students? Cash and cash equivalents. Cash and cash equivalents. So cash and cash equivalents in this question are which ones? Was there bank overdraft?
Yes.
Short-term investment. Cash in hand is also there. Instead of wasting your time with that working, you can do it here. What was short-term investment opening? Opening was 0. Sure.
Yes.
There is nothing. Short-term investment, sorry, cash in hand, opening. 1. How much was bank overdraft beginning?
98.
Overdraft opening, are you seeing 98?
Yes.
So 98. So opening is that. I hope you have seen them. Short-term investment at the beginning, 0. Cash, 1. Overdraft, 19. Giving you negative? Okay. So negative 60, positive 64 minus this comes to negative 33.
Yes.
Negative 33. So if we work out the closing, we should get that if at all we are correct. So closing, cash and cash what? Cash and cash equivalents. That is, check closing, 50 plus minus 85. Does it come to negative 33? Does it come to negative 33? Yes. So that is it. That is it. Listen and listen carefully. Listen and listen and listen carefully. I'm not highly, but I'm not expecting cash flow, but they can bring because you are not preparing for it. But if they don't bring, I anticipate them bringing the theory part of it. So the theory part which they can bring, I want you to write them down, go and research. Make sure umepata hizo majibu. So write for me these questions on cash flow. Make sure you have searched for them in umepata. One, they will ask you the benefits of preparing a statement of cash flow. Benefits of preparing a statement of cash flow. Preparing a statement of cash flow. Ghana 5 points, which is 5 marks. Then the differences between indirect and direct method. Differences between direct and indirect. The differences between direct and indirect method of preparing cash flow. Three, explain your nipatie formats, at least two. Next, explain why the net profits for a company may differ. Net profit of a company may differ with its reported cash, balance. No, with its reported cash balance as per the cash flow statement. As per the cash flow statement, correct. The cash flow statement. Good. Now, so make sure umefanya research na umepata hizo vitu. If they are not bringing cash flow, they will bring those theory. Alafu wanaleta hiyo theory part A, part B wanaleta inaitwa ratio analysis. So nilifanya hiyo ratio analysis. Sio? No, nilituma handout, but tunafanya hesabu. Kwa hiyo tutasoma tu hiyo handout, then that's what we are doing tomorrow, then we close. So today there's something I want us to do. Though in the syllabus they are not capturing it, but I feel maybe when I feature one then ukiangalia syllabus you will not see it. It is called control accounts. So for now I want us to do control accounts. Then if we do 1 or 2 questions, then tomorrow you make sure umesoma hiyo handout niliwatumia. Then kesho tunachambua hiyo handout kidogo, then we do a question 1 or 2. Then but I'm highly come examine ana beef na sisi. They should bring ratios. That ratio analysis should be examined. Kama kuna beef ataleta cash flow then. So niandikia hapo control accounts. But at least this one ingekuja venye ulikuwa unalia ile siku. Si baya. Hata walete. Waongeze mpaka na partnership. Mambo ya? So, andika hapo control accounts. Andika. Umeamka sasa. Control accounts, you say, these are accounts, these are accounts, these are accounts which are used, by senior finance officers, to verify the entries in the debtors and creditors accounts. Debtors and creditors accounts. Debtors and creditors accounts. Full stop. But then don't be ukweli. Do you know mwalimu akisimama hivi hata online I can see how they are. The way online walikuwa tukianza, there was a lot of problems. Hata sikuwa nasonga kidogo, nasema tu hivi. I've not understood. Repeat. Siku hizi watu wametulia. I assure you. 100%, if you mtapita 100%, hizo zingine ni sijui. Mtapita. That one I'm sure. I look at you, I've seen, mtapita, hata usishtuke. However, after exam, immediately after exam, wengi wenyu watanichukia sana, mwalimu anawaste. So ni ngumu. Itakuja utaona ni ngumu mpaka unashindwa time imeisha hata sijamaliza. But results kutoka utaona umepita. Mark it on me. Bora umefanya maswali zote mtapita. You know you are competing with some people who hata waende class. Si hapo university kuna watu wanajisomea tu wanaenda kufanya mtihani. You think they know easy mathematics critics iko hapa. Mtapita. That one I'm sure. Aya. Full stop. Full stop iko hapa. Tuandika nini wala full stop. Oh, so unajua postings in the books is done by the junior accounts clerk. Lakini finance manager haisi shinda akiangalia data tunaweza pata wako wengi. Si ndio? There are so many like 10,000 customers. So yeye anatengeneza account moja ili na combine wote. Then an account a check. Then that account is only for people who are buying on credit. Unajua hata shopkeepers wako na control account. Mtu akinunua kitu na deni, si kuna kitabu anaandikanga watu madeni. Ama kwa duka mtu akinunua deni si inaandikwa hapo. So amechukua na atalipa. Mtu akinunua cash, unaulizwa kwa jina, uende hapa na ipa sasa hii ununue kitu cash. Utakuja wanakuuliza what is your name. So control accounts are only meant for credit, sales and credit purchases. In fact, this account only verifies credit, sales and credit purchases. Credit, sales and credit purchases. Full stop. Full stop. Types of control accounts. 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 We have trade receivable. Trade receivable control account is also known as sales ledger. Sales ledger control account. Also, we have trade payables. Trade payables control account, which is purchases ledger control account. Control account. So those are the two types of control. So this one verifies credit sales. This one credit what? Purchases. So I want to start with this, just giving you format. So I want to give you the format of the two. Then it's one. So, so right there, receivable control account. Wakitumia hii jina ingine usishtuke, that's the same thing. So receivable control account. Unakumbuka na NGO sahi? Unakumbuka subscription and arrears? Na niliwaambia hiyo wataleta, si ndio? Be careful. So shillings, draw this very fast. Shillings. Then balance brought down, debits. That's a debit balance. Balance brought down, credits. Then credit sales. Ongeza hapa. Debt collection. Debt collection fees. Weka hapa. Interest on overdue. Overdue debts. Then then what else? Then cash received from credit customers. Credit customers. Let up. Bad debts written off. Let up. What else? Discount allowed. Bring it there. Credit notes. Credit notes issued. Bring it there. Contra settlement. Bring it there. What? Bring it there. Balance carried down. This is credit. Balance carried down. This is debit. Then the other one. Payables control account. So trade payables. Trade payables control account. Payables control account. Payables control account. Payables control account. So just have the format again. Balance brought down. Debit. Balance brought down. Credit. Credit purchases. Oh wait. Hapa kwa receivables. There is something I think I've forgotten, which is very important. Customers dishonored checks. When a check has been dishonored, you credit cash flow, you debit this account. So, think up dishonored. Dishonored checks. Dishonored checks. Just fix it somewhere there. Very common. Dishonored checks. So, let's go back here. Then, discount received. Discount received. Credit note. Credit note received. Contra settlement. Hii kwa ngine maneno mingi as such. Return outwards. Return outwards. Even this one, return inwards. The first one, this one, return inwards should be on the credit side. Return inwards. Return inwards should be on the credit side. Return inwards, nipunguze deni.
What's the difference now between credit note received and now return?
With the return?
Yes.
No, when we receive credit note, so we receive credit note because of the returns.
Yes.
So they can use them interchangeably. Yes. Give me balance carried down, credit, balance carried down, debit. I have that. Check this. August. No, but I'm coming back to explain, then we do that question. But check August 2021, page 8. August 2021, page 8, question 1C. Question 1C. So I'm coming back to explain that. But for you to understand these two accounts properly, this one here, just treat it purely as debtors accounts, receivable accounts. So receivable being an asset, we will bring it down on the debit. Those people who have not paid. But if there are customers who have overpaid, we take them on which side? Credits. When we sell on credit terms, we credit sales account, we debit the controller. Debt collection fees, kuna watu wamekataa kulipa. Tumechoma fare kwenda kuchukua hiyo deni. Tunaongeza kwa hiyo. Sio? They should pay. Overdue debts or overdue accounts, tulisikizana 3 days. Amekaa 3 months hajailipa. Tunamcharge interest, tunaongeza hapo. If the check has been dishonored, you know when we received the check initially, we debited the cash book, we credited this account. Sio? The check imekataliwa na bank. So unairudisha hapa ikiwe deni tena. Sio? Then cash received, of course, bad debts to reduce the balance, discount allowed to reduce the sales, credit note to reduce the sales. Contra arises when the same person or the same entity is a customer and a creditor to the same company. It is possible. You are a customer and you are a creditor to the same company. Can that be possible?
Yes.
It is possible? Yes. Tuseme kama wewe una supply stationery. So ume supply shule hapa, bado hawajakulipa na wewe pia hujalipa fees. So they were supposed to pay you 10 na wewe pia hujalipa fees ya 10 na wanakuambia you cannot access na wao kwa deni yako. So unasema ikufe nayo. Ndio? So contra reduce the debt, also come and reduce what we are supposed to do what? Pay. So contra the same amount will affect receivable and what? Payable. Then it is called set off. Then are you seeing balance carried down? Maybe you are ameshtuka kwani kuna leka credit na debit. When I tell you that I have a closing debit balance, a closing debit balance means that the debit were more than the what? The credit. So inakuwa this side. But opening, a debit opening is normally direct. So that debit opening itakuwa, so now it will be on this side. So kama ni opening direct, openings are direct, but closing, ukipewa closing, it goes the other way around. So a credit closing balance means that the credit side was more than the debit side. So now it a balance is a begin. I think even then I want to have explained. So we can go to illustration. And look up illustration. So write that setting. Honorable members, silence. So that question, are you there? They said the following information, lakini tuanzie juu. Sasa hivi tunaringa hapa tukisema tumefanya kila kitu. But A of that question, even if it's not a topic we are covering, we can check. Explain the following types of accounting errors: compensating errors, complete reversal of entries, errors of commission. Sio tulifanya? Sawa, kazi kwa nani? Kazi kwa nani? Wako. Discuss the functions of the International Accounting Standards Board, ISB. Unaona ile handout niliyopewa? Iko hapo. Their major work is to develop accounting what? Standards. Yes, you are not a public sector. The following information was extracted from the books of data traders. So balance on purchases ledger, debit balance, credit balance, transactions during the month. Let's don't read all those things. To show to someone post. Sure. What is required? You go to required. You are serious people. Purchases ledger control account. Purchases ledger control is the trade payables. So andika hapo. Purchases ledger control account. What if I need 30% of 2.5? 30% of 2.5. Ni 30 hapa ni 20, no, 20. I need 20% of that of 2.5. 0.5. Oh. So half year shillings are in what? Shillings are in thousands. Shillings are in thousands. So we start so that when we read, becomes okay. Debit balance. So those are opening. So balance brought down. Debit. Well, we're working in thousands. So 980. While credit balance brought down was 2990. Good. Transactions, purchases on credit. You understand again? Credit side. So purchases, credit purchases. There's something maybe I've not told you. This one is 39,245. Cash, anything dealing with the cash transactions, you don't record in the control accounts. Provision for doubtful debts, we don't capture in the control accounts. Yes. Next, purchases returns. Purchases returns the return outwards. So purchases returns, it will be here to reduce the purchases. Sure. So purchases returns. Purchases returns. Then checks paid to trade payables. When you pay check, what do you do to the cash book? You credit. So credit cash book, debit this account. So checks paid. Checks paid. How much is this? 23,370. Proceed. Andika. Check paid to trade payables. Cash paid to trade payables. Hata kama ni cash paid, unajua ukilipa, you can pay in cash. Bora tu si cash purchases. So cash paid to payables. You know payables are credit suppliers. This is 65, 15. Discount received here. Sure. So discount received, how much? 11.55. Credit sales offset against credit purchases. You only contra. So that is contra. Credit sales offset. So offset you cancel. So that is contra. Nika contra. Hata nika for contra we know you. Hata ukitumia kizungu ingine. That is contra. Contra. 17.80. Credit purchases of motor vehicle posted in the purchases ledger. Those people should be 10. When you buy an asset, you don't post in the purchases account. So no question. Purchases is purchases of what? Goods. So they purchased, yes, they purchased, then they see you want to credit this one, then they debited purchases account. So they debited purchases, they credited this account. No, like purchase of motor vehicles. What is here? Purchase of motor vehicles should not be on the there. 29.90. Kila mtu afike hapa. Bas, hapo chini wameleka nini? Balance as at 31st May 2021. Sio ni closing. Umewapea ngapi? 885, but they have indicated what? Debit. Uliwapea debit closing is on which side? Credit. A debit closing means this side was small. So you bring it this side. So balance carried down, they have said how much? 885. So in this case, they want you to get the balance on this side. So this side, balance carried down. So balance carried down this side, what you do, add this side, including carried down. Yes? Then subtract everything.
Balance inatoka ya creditors.
Yeah, they are creditors.
From the creditors account.
Yes, from creditors account. Tumefanya tukapata wadalipwa hiyo amount. Sure. So add this side, then subtract this side. Tukapata hiyo balance. Nika?
54, that is next. That's 381. No, 54.
Ama sema whichever. Aha, imekuja ngapi? 54, 54, 35. Page 68. Let's meet in page 68. Page 68. Page 68, page 68. Open page 68. All right, so are you there? Page number, question 5, eh? That setting is which setting? September 2015. So it is September 2015. Question number 5B. Question 5B, page 68. Ilikuwa pilot paper by those days. So part A, explain two categories of financial assets. Financial assets hizo unaweza ulizwa tu from nowhere, tuandike. Andika hapo categories of financial assets. Categories of financial assets. Categories of financial assets. Financial assets ni hizi vitu wanatrade kwa stock market. So we have one, make hapo, one financial assets at fair value. At fair value through profit, stock loss, through profit, stock loss. Then you say these are short-term financial assets. These are short-term financial assets which are traded in the stock market. Unakuanga traded kwa stock market. Ukiwa na bonds huko, which you have said to be short-term. Number two, financial. There are only two. Financial assets at fair value. At fair value through other comprehensive income and income. These are long-term financial assets. These are long-term financial assets. They are long-term. So mwingine atakuja tu aseme financial assets at fair value, na mwingine aseme financial assets at amortized cost. There's another, we can just say from like one and the same. But then if you don't know a lot of stress, you know amortization. Amortization is always the reduction in what? Value. So this one, some people just say financial assets at fair what? Fair value. And the long term, you know they want to spend for long term, they can be called financial assets at amortized what? Amortized costs. So kama unaweza sahau hizi kizungu mbili, unaweza tumia hii bado, watakumarkia to right. So there is financial assets at fair value, then financial assets at amortized costs. Then what, ladies and gentlemen? We go to that question. Go to that question. So in that question, Ali Limited has provided the following financial information for the month ended 31st August 2015. As you can see, additional information one. No, additional. Required sales ledger control account 8 marks, purchases ledger control account 8 marks. So what we do, let's draw the two of them. So ukipost ya huyu unaweka huku. Sawa. So draw all of them. Sales ledger control account. Sales ledger control account and purchases ledger control account. So just leave sufficient space like that. Then purchases ledger control account. Purchases ledger control account. Like that. Is that okay? Kick off. All right. Shillings are in millions. So millions. So how they're in millions. Then we kick off. Are you ready? Yes. All right. Receivable debit balance. So receivable need sales. Receivable need, then purchase payable need here. So debit balance is here, opening. So balance brought down 12. Then payable credit, payable is this one. Balance brought down 8. See, lazima zikuwe na opening mbili. Sometimes we find it's 1. So if it is 1, it's okay. Next. Credit purchases here. Sure. So credit purchases. Credit purchases. How much is this? 60. Oh, no, 28. 40. Allowance for irrecoverable debts. You know there's an allowance for doubtful debts. Doubtful debts we don't put in control accounts. That is the rule. Because we are not sure. You know, doubtful means they may or they may not pay. So unless we are sure they will not pay, that is when we post it in the control. Yes. So that one ignore. Credit sales here. So credit sales. How much is this? 36. 30. Next. Return inwards. Return inwards is meant to reduce sales. So you credit. Return inwards. How much is this? 100. Discount received. Purchases. So discount received. How much is this? 9. Apple. Return outwards. Purchases still. So return outwards. How much is this? 40. Interest charged to credit customers on overdue accounts. Ongeza hapa walipe, sio? So interest charge wale watu wamekaa na deni wataki kulipa 20. Mwanani, hebu ona. Unajua hii ni pesa ngapi? You know you're working in millions. So wamechajiwa interest ya 20 billion. Unahama hii dunia. Sio? Next, discount allowed, reduce sales. So discount allowed, how much? 6. Receipt from credit customers here. Receipts from credit who? Customers. How much? 904 there. Payment to creditors here. So payment, how much is this? 2207. 2207. Irrecoverable debts written off here. Those are bad what? Bad debts written off. 12. Customer check dishonored. Write it back. So tukipokea check to the credit account. So dishonored checks. Dishonored checks. How much? 50. Payable ledger credit transfer to receivable. Contra, we know you very well. So no. See the contra. Transfer of credit to receivables. So that is contra. We reduce this and this. 50. Yeah? To 40. You bring it here. Contra to 40. You go to the notes. Note 1. An amount of 200 previously written off was received in the month of kuna bad debts which you had written off. So when you wrote off, you created the account. Customer amekuja akasema mimi siendagi na deni ya wenyewe. Mungu amenisaidia nikapata pesa. So you need to bad debts recovered. Debit here. So bad debts recovered. Bad debts recovered. Wengine wanalala 0.2. 0.2. In millions. Number 2, claims by Ali. Who is Ali? The owner of the business. Limited for price reduction in the month of August due to defective goods was approved by supplier amounting to how much? 50. So there are some goods we purchased from suppliers, this one, but they were defective. So we told the supplier 2 things. We return them to you or you reduce the price. Then the price approval was made that they reduced the price by 150. Debit here. Price reduction. Price reduction. 0.15 to reduce the purchases. Sure. Yes. An invoice issued of 480 was omitted from pay book. Credit sales kuna tu post. Omitted what? Omitted invoice. How much?
48.
48 is 0.48. We are done. So because it was one balance, you'll also have one balance in figure. Balance carried down. Balance carried down. Now this one will be this side. Balance carried down. Hiyo mfano kwa mtihani hamtafanya. Wacha nitafute Grace. Grace ako happy. Grace, is this one okay? How is this one? So add this, subtract, what are your balance? Add, subtract, get that balance. Grace amesema now this one they should let them try us. Higher. They can bring it very funny in exam. Wakupe tu kitu tu mingi, then they tell you trade receivable or ledger control account. Then Roman 2 wakwambia revised or adjusted trade control account. So if they tell you revised, listen to this. Unaweza shtuka. Hakuna kushtuka. What you do, if you have two of them, like they're telling you, sales ledger control account, then Roman 2 revised sales ledger control account. That one can only exist if you have additional what? Information. So if you have additional information like this one, the first one, you just do it the way we did, but you don't bring the additional information. So you finish, you close, then the balance umepata, you say brought down, then you adjust the additional information, then again you close in the same account. Tumeelewana? Yes, so if they tell you the original and adjusted or revised, do it without notes, then now you close, you bring down the balance, then adjust the notes thereafter. The way I know you, those are small things. So tomorrow, when we meet at 2, I will finalize very well with the ratio analysis. So, ratio, it is the handout I sent. Check on it. Tutakuja ku summarize na hiyo. Alafu Judy amesema atatuombea, then tumalize. So thank you. Do have a nice evening. And God bless us all. So I'll be having a class here at 4:30. Then online before you send, I was recording the class. Should I send from the cash flow and the rest? I'm sending. Then now what you do, because that account I'm using it for some other taxation and financial matters. Ukienda hapo unai-subscribe so that when I post anything you can be able to see. So let me end this one. Online, I want to end because I was recording. I hope everyone is covered. Someone was asking something. I come. Oh. You've destroyed it again.